Hello Wolfpack, welcome back to another Bitcoin video here. I'm going to be looking into some interesting charts today regarding the need or the potential need for a dead cat bounce on Bitcoin. Now, this dead cat bounce is going to be brutal. It's going to shake a lot of people out. It's going to get a lot of people bullish that probably shouldn't be bullish just yet. And it's going to lose people a lot of money and ultimately make people lose complete faith in cryptocurrency. Now, one of the reasons why I'm looking for a dead cat bounce here, and it might seem weird to you guys because we've just seen on the hourly chart, I'll return to that point in a second. We've just seen on the hourly chart here a bearish Adam and Eve formation, so an inverted Adam and Eve formation, which we have the Adam over here in form of a peak, a triangular peak, and then a rounded top, which is obviously the Eve. We saw a breakdown, and we've gone straight into bearish pennant formation. And obviously, as per this bearish pennant formation, if we're taking a measured move from the top of the Eve and applying it to a breakout zone, which could be something around here, we're actually targeting down here at like 16K. And so this is by no means a bullish structure. And so it is worth keeping in mind that short term we are bearish. Regardless of what I say at the end of this video, regardless of what I say during this video, short term the chart is actually bearish. And so we need to be watching particularly this bearish pennant structure. If this breaks to the upside, that would be an indication that maybe we're going to be seeing that dead cat bounce. And apologies for that over there, new computer. And if we're seeing a breakdown below this pennant formation, that would actually be an indication that we could actually be, continuing downwards as per the measured move from this Adam and Eve formation. So if we're taking a measured move from the top to the bottom to the neckline and applying it to a breakout zone of the neckline, we'd actually be targeting the low that we reached here on June 19th, which is 17.5K. So this pennant really does kind of, tell us where Bitcoin's going to go. As soon as we see a breakout from this pennant, we're essentially going to be going straight up to 21.9K, or we're going to be going straight down to 17.5K. There's really no in between. And I say 17.5K, what I actually should be saying is we're going to go straight down to this uptrending line, which of course would be around 18K, not 17.5K. Now, what is this uptrending line? And now that we've kind of moved past the short term is obviously quite bearish. We've looked at that, but we are waiting at this point to see what this pennant does, because at areas of major support like we're at right now, you generally see the price act slightly irrationally, and so short-term patterns like a short-term bearish pennant formation cannot be fully trusted. We need to zoom out, we need to look at the longer term. And on the longer term, for example, if we were to look at the monthly chart for just like 2 seconds here, we can see that on the RSI and the monthly chart, Bitcoin is actually the most oversold it has ever been. And this is reasonable. This is a reasonable thing. It sounds ridiculous to say that, but of course it's reasonable because we're the most oversold we've ever been in the RSI, the monthly RSI. Some people would say that's a buying signal. I would say it's not. I would say it's reasonable because we are in a unique time that we have never seen on Bitcoin. We've never seen a bear market on the traditional markets during Bitcoin's entire lifespan. And so we're also on the lowest level we've ever seen in the RSI on the weekly chart as well. And even though we're at these low levels, and even though it's kind of justified due to the traditional market, bear market, we can't simply ignore the fact that we're on the lowest level we've ever seen in the RSI, and we're on a major macro uptrending support line that has lasted for the last 7 years. We can't ignore that. And so for that reason, it stands to reason here for Bitcoin. And it kind of would make sense if we see at the absolute most a drop down of this uptrending line and then a bounce off of it. And then, as per the 4-year cycle theory, which we'll look at in a second, a drop down later in the year in Q4. You guys know what my opinion about it that is. Most of the people who watch these videos are returning viewers. You know what my opinions are on the market. I'll just quickly say it for people who don't know. I think that right now, Bitcoin is at a critical time. However, I don't think Bitcoin is going to bottom out until Q4. And the reason for that is the macro situation. We've done macro analysis on many occasions. And also the 4-year cycle trend, which is indicative of a Q4 bottom. It's indicating a Q4 bottom as per the date range trend. So there's 2 data points there. There's 2 interesting things, and there's many data points within those data points. But those are kind of the overarching kind of branches, and they go further and further down into the ground. And there's many points that you can point to. But ultimately, I think the trend at this point does suggest the macro trend. And if you're talking about a macro trend, you shouldn't be looking at the 7-year line. You should be looking at the 4-year cycle theory. That's the ultimate macro trend. The macro trend suggests at this point that Bitcoin will not be bottoming out until Q4. It doesn't say what price it would be. I'm going to assume the low teens, mid to low teens, 11K to 13 or 14K. That's where I'm mainly looking at. But the point of the matter is that we're on the lowest level we've ever seen in the RSI. We're probably not going to bottom until Q4, and we're on major support. Now, since we're probably not going to bottom until Q4, according to that analysis, we've got a few months to kill here. What are we going to do in those few months? Are we just going to sit here at 19K? Are we going to grind up on this major 7-year macro line, or are we going to see a dead cat bounce? Given the fact that everything is so incredibly oversold as per the TA right now, it would make sense for us to see a dead cat bounce. Let me show you something Because I know most people are bearish right now. I've done many polls. About 80% of the market is bearish right now. And so people might be rejecting this a little bit. And they might be thinking, no. We need to drop down right now. And we need to go to 3K, right? I'm bearish as well. I'm long-term bearish. I think we're going to go to 11K to 14K, somewhere in that region, right? I think that's the case. I genuinely do. I think it will be in Q4. I think we're going to go down there. I don't buy any of the claims that we're going to go lower than 10K. I just simply don't think that's going to happen. I certainly don't think we're going to 3K, and I certainly don't think Bitcoin is dead. But I can say, pretty confidently that I think, I don't necessarily think the Bitcoin bottom is in. But what I can say is that we're on macro support, and we've got the lowest levels we've always ever seen on the RSI and the MACD in some occurrences. And so it would stand to reason, after seeing the largest red month in Bitcoin's history, that we see some sort of dead cat bounce. I mean, seriously, if you look at the weekly chart, we haven't had a dead cat bounce since 48K. We're currently in 19K. I mean, come on, we've got to see one eventually, right? And seeing as the 4-year trend, the 4-year cycle doesn't indicate the bottom is in yet, as per the date range, we have time to kill. And so a dead cat bounce seems likely here. Let's look at the chart. And let's not only look at this chart, but let's invert it in a second. But before we invert it, we need to draw out some critical lines, okay? These are objectively true critical lines. They're not my opinion, they are the facts. And when we get these lines down, we can flip over the chart and we can see what it actually looks like. That's a great way to remove your bias, because most people right now have bearish bias, right? That's a fact. Even myself, I have slight bearish bias, but it doesn't mean I can try, it doesn't mean I can't try and be objective. I'm going to try to do that right now. So what we need to do, and what we mainly need to do here on Bitcoin, is go to this chart. We need to outline some critical levels. The major critical level to the upside is 28.6K. Let me get that up. That is the major breaking point. If we break above 28.6K, and you can see why it's so important. I mean, it's really, it's not something, sorry, my eyes are a bit weird. It's not something that we're surprised about. 28.6K was the macro support. In January 2021, it was the macro support through May to July 2021. It was the macro support before we dropped down to 17K here in May 2022. It is the line in the sand. If we break back above 28.6K, that's basically a confirmation that we're back in a medium-term bullish trend. That's a confirmation that, the bear market drop is over. And so that is the critical line, 28.6K. Now we can also draw another critical line, this time a diagonal line, and that is stemming from the top of this dead cat bounce here on March 29th, and it's going all the way down, and it's doing something like that. It touches a few points on the way down in April and early May. It just misses the top here in June, but that is a critical downtrending line. And then what we can go ahead and do as well is say, okay, where is our speculated bottom? I've spoken about it before. The biggest major support level below the 7-year macro uptrending line, which I think will be lost, is sitting at around, 13.8K, right? As by the peak in 2019 to around 11.5K, as by many peaks during the 2019 bear market, and also as by the peaks during the 2018 bear market dead cat bounce region, and as by these peaks here, right? So 11.5K to 13.8K is basically the next major level of support on Bitcoin that we need to be looking at below this macro uptrending line. And that's ultimately the level I think we'll bottom at. But as of right now, we don't need to talk about it anymore. We've talked about that so much. As of right now, we need to be looking objectively at what's going to happen over the next few months, really, because we've got a few months until Q4. What's going to happen? Well, it's very hard to see when you look at this chart. When you look at this chart, you think, okay, well, this is just very bearish. We're probably just going to keep going down. Maybe we'll go just sideways for a bit. All you need to do is flip it around. Okay? This is the same chart I just looked at, but flipped around. And all of a sudden, it seems very overextended. And all of a sudden, it seems like, using objective TA, that we need to drop back down to something like 28.6K, or at least this macro uptrending, this yellow uptrending line here. So what I would propose is this. I would propose that as of right now, Bitcoin is doing something very similar that it did in November 2021, right? We saw a first peak after a big drop. So in this case, a massive pump. We saw a first peak, it was slightly lower than the next peak, and then we corrected massively, right? I would assume we're going to be seeing something similar to that. I think that we'll see, as you can see, a massive pump here on the inverted chart. First peak, I think we'll see a second peak slightly higher, maybe in form of a wick, and then I think we'll drop down either to this macro, I keep saying macro line, this yellow uptrending line, and then bounce up and do something like that, and bottom out maybe something like this, and then go into Q4 and then come back around, right? In which case it would look something like this. That would be a long kind of rounding out bottom, which is typical of bear markets. Or I would even go as far to say that there is the chance that Bitcoin actually comes down this yellow line, drops below it, goes to 28.6K, bounces around there for a while, rejects, come back here in Q4, we finally bottom out in Q4, and then later, looking at, very, very late 2022, early 2023, we come up and we start making some gains. I would propose that is probably one of the most likely scenarios we've got here for Bitcoin. It would probably look something like that, right? I think inverting the chart, it becomes insanely clear that we are very overexposed and we are very overextended as per the TA. Now, that's the thing about this argument, though. As per the TA, what we do know about Bitcoin is that a lot of the price action, a lot of the negative price action, the reason we've seen the lowest RSI in the entire history of Bitcoin, the reason we've seen the worst monthly candle ever, isn't because of a TA, it's because of the fundamentals. And the fundamentals, by fundamentals I mean the macro situation with traditional markets, they look abysmal, right? And so we very well could just see if, I'm talking about TA analysis here, which is everything I can look at. I can't look at the fundamentals because it creates insane bias. If we're going to act true to the TA right now, we should be seeing something like this, at least, or even something like this, a break upwards and then come down later in the year. That is what the TA would suggest. The TA would suggest that we are way overdue for a dead cat bounce of some sort. Okay, so I'm just telling you what the TA suggests. Now, again, does it necessarily matter? That's a very difficult question to answer because it depends on your time frame. I don't necessarily think it matters because I don't actually get affected about how much money I make, whether this happens or not, because I've got trading plans set up that I'm going to react to regardless of the situation. That's the benefit of being a trader. Now, if you're a Bitcoin holder, it could matter to you because it could matter that, hey, if you buy now and then you set up for a dead cat bounce and you sell here and then you buy back in Q4, that could be something you might be aspiring to do, but I would wait for some confirmation. And the confirmation I would need for that would be firstly a break above this downtrending yellow line. Let me go to a daily chart on Bitcoin. If we break above this downtrending yellow line, that would be a confirmation that we're going to be seeing some sort of significant dead cat bounce at least to 28.6k, right? So long as we remain below that downtrending yellow line, nothing's really changed on Bitcoin and you can still kind of expect lower prices, but that downtrending yellow line is kind of the critical medium-term level. And I think we have a decent chance of breaking above that and seeing a dead cat bounce. If not, we might just see a very small dead cat bounce up to the line itself and then reject and come down to that level a lot earlier than expected in August or maybe early September. So I'm just kind of, I suppose in a certain way this video is a little bit pointless because it's proposing that we could see a dead cat bounce, but I don't think it's pointless. And the reason why I don't think it's pointless is because when I see that 80% of my subscribers are bearish on the market right now, not only in the long term, but in the short term, it makes me worried. It worries me, right? Because when I saw that back in 2021, when I saw that, 80% of my subscribers were bullish and I was flipping bearish, I knew that something was up here. So I'm just saying that, although I'm still bearish on the market, I still think Q4 is going to be the bottom. I still don't think the bottom's in. Please just be open to the idea that we could dead cat bounce. And if we do dead cat bounce, don't be silly. Don't just jump back into the market and start believing the same influences that got you trapped in 2021. It probably wouldn't be a sign of the bottom unless we break above 28.6k, in which case we need to start talking about it. Right? Thanks for watching, guys. I'm going to look at a few things before we sign off the video, though. Firstly, what I will look at here is Wolf's Crypto VIP. We've been pulling some massive profits on the VIP channel. In fact, I'm going to go ahead and say that the VIP channel is way more important than my regular videos because I am a trader first and foremost. That's how I make my money. That's how I pay the bills. I'm a trader. And so my Bitcoin analysis is relevant to my trading because obviously I need to know what happens with Bitcoin if I'm going to trade correctly. But ultimately, this is where I make the money. And so if you want to gain access to my trading charts, if you want to get access to the trading plans and the trades that I'm taking, you can click the join button on the Wolf's Crypto channel. And for the low price of 28 USD a month, which is $1 a day, basically, less than $1 a day, you're getting access to an altcoin trading signal every second day, prioritized reply to my comments. So I'll prioritize replying to your comments, a 2-hour video on market psychology as well that is exclusive to VIPs, and then also access to my trading view charts so you can look at them in your own time. Absolute bargain. And then we've got the Become a Trader course with the Crypto Academy. This website doesn't seem to be loading right now. Let me refresh this so we can get it up properly. Become a Trader course, Crypto Academy, 10-unit course developed by myself and Mega Well Crypto. We've just actually made kind of like a video that kind of introduces you to the course and shows you around the course. If you want access to that video, please go ahead and email us here at cryptoacademycourses@gmail.com. We'll send it to you. Also, if you want the payment information, etc., email us there at that email address. But regardless, it's a course that teaches you everything you need to know about trading. So TA itself, how to trade, how to find trades, everything you need to know, literally. What is a market pattern? How does it work? Indicators, and kind of just an overarching course that doesn't actually just focus on shooting information at you, but also kind of focuses on how you can consolidate that information, how you can retain that information through many quizzes and worksheets. So in that way, it's very, very unique, and I highly recommend you check it out. Next up, I've got the BitGet exchange. BitGet is my favorite exchange. You guys know this by now. I use this predominantly in my trading. I also use Binance mainly for spot positions, but BitGet is where I like to keep my funds, because when you're trading with a large amount of money, the fees do stack up quite quickly. And BitGet has the lowest fees in the game, even lower than that of Binance, which is, in contrast to popular belief. People think, well, Binance has the lowest fees in the game. Well, actually, BitGet does. And BitGet has way more security than Binance, in the sense that they don't have scam wicks like Binance does. Binance is very, very famous. Doesn't happen too often, but it does happen often enough for having scam wicks that kind of liquidate a bunch of people on the exchange that weren't actually caused by the genuine price action. They were caused by, I guess you could say, faults in the inner workings of the exchange that kind of just get people scammed and waste their money and get them liquidated on long positions or short positions. BitGet's never seen a scam wick in its entire existence and has systems in place to stop that. But I highly recommend BitGet for futures trading mainly. Again, lowest fees in the game, no KYC, doesn't matter what country you're from, you can use BitGet with no problems. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers.